First, let's start with an overview of MFRS8. So what is MFRS8? MFRS8 is a financial reporting standard that sets out the requirement for segment reporting. The main objective for MFRS8 is provide user of financial statement with clear and relevant information about the different business statement within a company. It also engages in business activity for which it may earn revenues and incur expenses. The operating results are reviewed by the Chief Operating Decision Maker (COTM), help management make decisions about resource allocation and to assess how well the segment is performing. Segment exceeding quantitative threshold, which is 10% task for revenue, profit loss or asset, must be reported. If the total external revenue of reportable segment is less than 75% of the entity's total revenue, additional segment must be reported until the 75% threshold is reached.
Next, I will explain about CODM. What is CODM? CODM is known as Chief Operating Decision Maker. CODM is the person or group within organization whose function for assess the performance of the various segments and decide on allocation of resources to the segment. It is the highest level of management such as CEO, COO, CFO, senior management team or board of directors. CODM is important because they play an important role in how an organization is managed. Next, the example of Chief Operating Decision Maker. We have Hap Seng and Bonia Company. The first one, Dato Edward Lee Min Foo as Group Managing Director of Hap Seng Company. And the second one, Dato Sri Chiang Ho Seng as Executive Vice Chairman and Group Chief Executive Officer of Bonia Company.
Let's move on to the third question. First, let's look at the geographical segments for Hap Seng. From the table, we can see that most of Hap Seng's revenue comes from Malaysia, with about 5.89 billion in 2022, showing that Malaysia remains the main market for the company. Other Asia countries, mainly Singapore, Indonesia, and China, contributed around 1.10 billion, indicating some level of regional diversification. In terms of non-current assets, most of them are also located in Malaysia at about 8.58 billion compared to less than 1 billion in other Asian countries. This means that most of Hap Seng's operations and investments are still based locally. For the next segments, Hap Seng Consolidated Berhad operates through 6 main business segments, namely plantation, property, credit financing, automotive, trading and building materials. Each segment contributes differently to the group's overall financial performance, ensuring diversified and sustainable growth across multiple industries. In 2021, the group recorded a total consolidated revenue of 6 billion and a profit for the year of 1.01 billion. The main contributors were the trading and automotive segments, which performed steadily despite market uncertainties. In 2022, Hap Seng achieved a higher consolidated revenue of 7.1 billion, showing an improvement from the previous year. The trading segment generated 3.46 billion, while the automotive segment contributed 1.75 billion. The group's profit for the year increased slightly to 1.06 billion, supported by stronger market demand and improved operational efficiency. Now, moving on to Bonia. Bonia operates across Southeast Asia, particularly in Malaysia, Singapore, Indonesia, Vietnam, and Myanmar. This shows that Bonia follows a regional growth strategy, expanding its brand presence beyond Malaysia. For business segments, Bonia focuses on retailing, manufacturing, investment and property development, design and distribution, and license. In conclusion, both companies show different focuses. Hapsin relies mainly on Malaysia with diverse industrial operations, while Bonia expands regionally across Southeast Asia in the fashion and retail sector. Hapsin's strength lies in its automotive and trading segments, while Bonia's main revenue driver is retailing.
The key benefit of segmental reporting. First benefit is to improve decision making. By providing detailed financial information for each segment, it helps make better decisions. As we can see in the Bonia's business segment, they provide detailed financial information for every segment, where they include how much the revenue and how it resulted on each segment.
The second benefit of segmental reporting is enhanced transparency. MFRS8 requires companies to disclose financial information for each segment. By disclose company financial performance by segment and provide detailed insight into revenue and profit, it allows for a better evaluation of each segment. This is example of business segment of Hapsin company. It gives user of financial statement a clearer picture of company operation. This allows for a better evaluation of each business segment.
What is MFRS134? MFRS134 is Malaysian Financial Reporting Standard for interim financial reporting that provide the guidance on how companies should prepare and present their financial statement. The main objective for MFRS134 is to ensure that the entity provide timely and reliable financial information to users. It applies to listed entities whose equity or debt security are publicly traded as required by Bursa Malaysia. Standard that govern interim financial reporting, which means reporting for a period shorter than a full year with minimum condensed requirement by MFRS 134. So, what is the minimum condensed that required by 134? It is condensed statement of financial position, profit or loss, changes in equity, cash flow, and explanatory notes.
Okay, now let's take a look for question number 2, which is two significant events and transactions that affect an entity, financial position and performance for Bonia Sdn Bhd. First key event is the changes in composition of the group. Bonia has subscribed for a new ordinary share in Microbuses Sdn Bhd on the date 19 December 2024. This resulted in increase in non-current assets, specifically under interest in association. As looking at the SOFP above, the interest in association increased to RM 9.321 million as at 31st December 2024 in interim report compared to RM 1.308 million as at 30th June 2024 on annual report. Okay, now let's go through for the question number 2, which is two significant events and transactions that affect an entity financial position and performance for Bonia Sdn Bhd. The first key event is changes in the composition of the group. Bonia has subscribed for a new ordinary share in Microbuses Sdn Bhd on the date 19 December 2024. This resulted in increase in non-current assets, specifically under interest in association. As looking at the SOFP above, the interest in association increased to RM 9.321 million as at 31st December 2024 in the interim report compared to RM 1.308 million as at 30th June 2024 on annual report. Finally, let's look at the standard reporting period for the interim financial statement. Interim report covered a quarterly period, specifically October, November and December for the second quarter. All of the 4 statements will be performed in the tabular format at the next slide. The first statement is statement of financial position, which is show the company asset, liability and equity at the end of second quarter, which is 31st December 2024 and compared with 31st December 2023 last year. This statement provides a snapshot of financial stability and liquidity. The second is statement of profit or loss and other comprehensive income, which is cover the cumulative period 1 October and 31st December 2024 current year compared with the previous second quarter 2023. This statement is to show how the company revenue and expenses has changes over the year and help in identifying the company future profit. The third statement is statement of changes in equity that explain the movement in owner equity over second quarter 2024 compared to the last year 2023. This statement including the profit and loss, dividend and other changes which will help the user to understand how retained earning and capital involved. Last statement is statement of cash flow. This statement reflect cash inflow and outflow during second quarter 2024 compared with second quarter 2023 last year. This was highlighted about the cash movement that can be divided into three parts, which is operating, investing and financing.